Greetings, market rebels. Welcome to this week's macro measure and sector situation combined. It is Friday, May 9th, 2025, expiration day, and it's just about 20 minutes to 4 p.m. here on the East Coast. Not quite, but just about. I'm Wayne. Here is the trusty market rebellion disclaimer, and here is our trusty market rebellion intellectual property rights notice. Here is last week's slide. I tried to do a couple quick highlights, mainly keeping those in that kind of hot pink, rose pink, mainly the colors. And then let me get the laser pointer going here. I made this very prominent, font wise, just so everyone could see that this is something we've been anticipating, and it's happened really, I guess, in the Qs, and it's close, really close in the SPY. So we're there, and I guess that's really part of what's going on this week, which we'll talk about shortly. Trying to see if there's anything else I should hit on. I think some of the information we covered last week was hopefully helpful. Try to just say stick with it, even if you don't believe in it. It looks like they're going to get there. You had to figure there's going to be a bounce back under most circumstances. Just all about, right, you just don't know when that news factor can really perk up. So let's go to this week's slide. And this week's slide I'm calling Rubber Road Risk as just reminders, because I think the rubbers should start meeting the road now. And there's risk associated with that beyond the obvious. I think there's always, right, when you get to key technical levels, especially where there's confluence among different technical factors that could impede the market's progress, that you have that risk, or it could just reverse the market as well. But you also have a couple other things, which I'm going to get into. And I've got really just a few things highlighted in colors, so just to kind of really bring them out. But otherwise, we should talk about all of these, but I'll need to get to the charts and reposition, trying to make this move along. Really just don't have time to do much else. Remain, as I said a while ago, might have even been a year ago at this point, just extremely pressed for time. So have to do what we can under the circumstances. So let me get screen 3 shared now. And this is a very reduced down. This is a basic chart that we've been going to lately, just to get a real clean look at things. Excuse me. And this is the SMH. So the point I'm trying to make here with the SMH is that it's really got this rising wedge in it, if you want to call it that. Some people might call it something else, but it all depends, right, on your vantage point. So if I do something like if I brought a smaller chart in here, it would look a lot more vertical than it does right now. And in other words, this slope would look, if I crunch this together, it would look more vertical. And so the thing about rising wedges, and this is really where I started spotting a lot of these this week. The thing about this is that you end up in a situation where this is in my book, concerning. It doesn't mean anything at the moment. It just means if you break down below here, things can fall apart very quickly out of the downside of a rising wedge. So just keep that in mind. That's kind of the dismal lining on this week's slide, where I'm just highlighting the point that it's been a very nice comeback for SMH, the market, the Qs, the whole works, the spiders, of course. Many sectors have come back nicely, but it could fall apart very quickly. And of course, in the news environment we're in, that could happen very, very quickly. And it doesn't mean you just have an immediate whoosh right down. It just means that it can really change the tone quickly and put the market back on the technical defensive. I've seen plenty of these rising wedge patterns just really fall apart extremely quickly, and with a lot of damage done in a relative short period of time. So that's what I'm kind of highlighting in terms of risk management. That if you've done really well, on your trades, I'm not saying anything about investments. I'm just saying on trades, and you're still in some things, you may just want to be more of a roller. You may be more of a trimmer and roller. In the case of, we had a Tesla idea there was a vertical. I shared this SMH and the Tesla on Cocktail Hour, and I tried to note that we have the 285 300 call spread on in Tesla in an idea that's expiring today. And my point was that when you get this far above the short strike, it traded up to 307. The value of the spread was nearly maxed out, right? It was very close to being maxed out at that point. So the only thing you can do by holding on really is gain very little more or give a lot back. And so my point is, right, that when you get into that situation, you take the money and run. It doesn't mean you abandon Tesla. If you still like Tesla, and I think the Tesla chart looks pretty good, despite the fact, right, that news is like hanging over this market like Damocles sword at times. But I like the chart overall at the moment, and I could see this extending the rally. But right, I would completely take all the money since I can't really make more out of the spread. Take almost all the money that would be maxed out and get myself into something else that's different, that's probably a little less risky than what I got into initially, just because I've got over the weekend risk and so on and so forth. So those are some of the things I just wanted to point out, that sometimes, right, you don't have to wait till the last minute to eke out every last penny in the spread's value. You can take that money earlier. You might get your full $15 on the 285 300. I think we might have paid $5 for it. You might end up with that if you close at 300 or higher. But at the same time, right, if you could have gotten 1470 earlier and not have to sweat this out and not knowing what's going to happen, remember, if you haven't closed it, you don't know if that person, that the parties on the short side of the spread may elect to exercise if you haven't closed it out. Sometimes people do. It's minor risk, but it could happen, even if it closes out of the money. So anyway, just keep some of these things in mind, just to be smart about your position management. And I think over the long run, you'll be a lot happier if you are. So those are just a few things I wanted to mention. Other things I'm going to mention now are a group of stocks. And so someone was asking in Cocktail Hour, and I thought we were going to get to it, but I guess Mark decided we ran out of time. We didn't get to it. We have an idea in run, and I think the trigger was 870 on it. I can't remember. But anyway, the point is there was UOA. It looked pretty interesting to me, and it's popping, so we got it in the log. But we also saw other stocks that were looking interesting as well. So one of those was First Solar. That to me looks potentially interesting. Another, I'm just mentioning these. Another one that looked kind of interesting is BP. And I want to say NEE also looked interesting chart wise. So I can't go into all that. I just wanted to I hoped to share this on Cocktail Hour and wasn't able to. And I just wanted to pass those stocks along before I forgot about them. Oops, thought I had a chart there. Anyway, so we'll pick up on things. So let's get right into the rubber, road, and risk. And that is, right, the spiders, because it's tougher on here. I'll try to enlarge the chart and minimize some of these indicators and stuff. But you can see the purple right here. Let me get a better pointer for us. The purple line right here is the 200-day. I'll highlight that with my mouse pointer, excuse me, but I'll highlight this in blue. That's now a resistance line that I've had in there. And the 100-day is also right near there. That's the dashed white line. So this is really where the confluence is coming in. We were talking about this 570, let's call it 573 to 575 for a while. I mean, I remember talking about this a few weeks ago. I can't remember how many weeks ago, but I remember we talked about that getting up here potentially, and it's now gotten very close. So the test would seem to be on, and you've got to just watch out, right? We don't crack anything. You've got the rising 10 coming up in there in white. You don't want to see that get cracked, because then you could have this like mini double top and a little bit more of a pullback. But what we want to try to do now that really, if you think about what's happened here, the market closed last Friday at 566.76. We are at 564.26 now. So we're not even talking really even a full point, which is about half a point from where we closed. So that little pullback we hinted at, that did actually happen. very quickly. They did that, and then they reversed the market right off of the rising 10-day and right above the declining 50 there in gold. So again, the kind of SMA confluence, maybe a little bit of a flat line being near there, that seemed to help near that 555 level, and they've bounced it to this point. But the thing is, right now, on nothing that I can find, are you overbought? And that's a good thing for bulls, where if you have this big run, you have a nice little mild pullback, you cool off, and you're really close to pretty much where you were last week. That's pretty good overall, because that means you've held the gains, you've cooled off the market, you're not overbought, and that would let you really have a shot at a base camp, what I call a base camp, which means you're kind of right near there, this area that you plan to try to overtake, and you really are rested up and you're positioned to not have to run that far to get there. Right? That's really, to me, what I prefer to see. So that bodes well. It also bodes well that we're talking about bulls and we're talking about the modern market, where risk is really not as much of the equation as it used to be for a lot of people. That's the way that the powers that be have made it. That's the mindset. It's more about you got to get in, YOLO, all that kind of stuff. So under most modern circumstances, I would expect that they're going, news neutral assumption, they're going to find a way to try to attack this and try to get through it. And then the next question we'll be asking is, if they do, how far do they get through there? Can they hold above it? But that's a lot of important stuff bunched up right there in those mid 70s. So if they can get through there, that would be a really good sign, and assuming they can hold it. And then if you get a nice little rest after that, it would be great to be able to then try to break higher and work your way back. So as I've said now for many weeks, nothing would surprise me. I would not, even if you think things are falling apart economically, you think things have gotten a little ridiculous around the world and other equity markets have ran too far, and the US economy certainly isn't in the position that you thought it would be in, or that many others thought it would be in when we traded 613 in SPY, and you're back up near 600. You're not crazy. Just the way that the market works, just trade it. Don't worry about it. If you think something's really out of kilter, don't worry about the fact that you can make money on the way up, right? That's what we're doing for trading. So investing is a whole different animal. I'm not getting into that. I'm just talking about trading. In these videos, I almost exclusively talk about a trader mindset, not much more than that. Every now and then I talk about longer term and things like that, just because I feel like it makes sense to, but in this case, I'm talking pure trading. So I would just try to go with that and not wonder why, right? Not sit there and say, well, how in the heck are we 2% away from the all-time high? If this scenario we're discussing plays out, that makes no sense to me. Just remember that a lot of other people are thinking the same thing, and a lot of other people are they're scratching their head as well. Anyway, enough of that. We had a little recording hiccup there, making sure I've got my cursor, making sure the share is good. Everything still should be good. So that's really one of my warnings about not trading this, because I've seen it happen many times and they work something back up. And I think really, right, you can make the argument, well, where did this thing break down from? And probably the real breakdown is really up in here, just off the highs with a trend line. But you could say probably for a lot of people, the breakdown is the 50-day at 599. So a lot of times they'll return, when they lost the 50-day, they'll return to the scene of the crime, as I call it, just to use an overused cliche. That would not surprise me at all. And I'm not predicting that. Remember, I'm just saying that having seen them work their magic so many times, that could certainly happen. Then you could roll over again. It all probably depends on how this news plays out. I don't know. I mean, I'm looking at it saying, at one point I remember Besant saying something about it, or someone saying it would take a few years to really work out a China trade deal. So I'm not sure how it works out over the weekend, but whatever. Who knows, right? Who knows? I have no idea what to expect. I'm sure Wall Street has a much better idea than I do. And that's why we're just sitting here reading the charts. So with that in mind, it's rested here. It's really positioned in a good spot to be able to try to take this on. It might not be easy. It is quite a bit of really serious technical resistance that's sort of all concentrated around the mid 570s to 580, if you want to throw the 150 in there. So not an easy task, but right, all they really need to do is get a couple of big pops in a couple of big names, and they'll be able to pull it off. I don't think there's any denying that the charts are better, right? Even though that V pattern, that rising wedge, is something that I see in a lot of places, not just the sector ETFs like SMH. If you crunch time a little bit, you can sort of see this sort of drop and then right back up here in XLC. You can see it. I have smaller sector charts that most of you've seen before, and if I bring those over, it'll be very obvious real quickly, and I'll get rid of these. But you can see like this V right here. This looks just like kind of like just like a V, similar to a V. You have a V up here at XLF. Other ones kind of resemble V's and all that. That's all I'm really getting at. And I'm not predicting that we just fall apart. I'm saying that that is a pattern that often does lead to a rapid retracement once it does fall apart. And there's a lot of them out there. So it's just a risk that's looming. As far as the Qs, we should take a look at those. The Qs are at a very similar position to the SPY. I mean, they are right at the 200, and they're respecting it for the second time from the underside, and the 100 and 150 are both in that vicinity as well. They're not too far away, maybe just 2% away. So again, I think this is a win when I look at the action this week, with only a few minutes left in the trading week. You're almost unchanged in SPY. At QQQ, you closed at 488. You're here at 488, right? So you pretty much did nothing other than you kept nearly all your gains to that point, and you managed to cool yourself off, and now you're not overbought, and you're really close to key levels to where, and you're rested, right? So that is all good stuff if you're looking at it objectively, right? Even if you think it's horse pucky that this is happening or whatever, it's still legitimately good technical behavior to this point, with the only problem really being that you got the rising wedge and the propensity for Trump to make this disruptive news, which happens quite frequently. Even in the best of times for Trump, things can be disruptive. So that is pretty much that. Those are your two biggies. The diamonds and IWM, of course, are lagging behind a little bit. We'll take a look at those, but we're not really doing much in there. You can see the diamonds still have a little bit of a ways to go to get to the purple 200-day up there. That's going to take a little bit more effort. They are holding above the 50. They're pretty much also unched on the week for all intents and purposes, right? So these are the scenarios we're looking at. I'll flash IWM real quickly, excuse me, and then we'll go from there. IWM, right, a little bit better on the week. As I said, I was kind of impressed by IWM's ability to do this. I hope there's something really real here. That would be really great, I think, for almost all of us in the long run. If small caps really start to participate in a meaningful way again, that's usually a really good sign. I wonder how that's going to happen with a lot of this macro information that's out there. It seems like Gunlach and Tudor Jones also feel the same way, because I believe both of them were interviewed or came out this week with some very bearish comments. I think especially Tudor Jones. I think he was saying like new lows and really, really big drop on the way. Now that's the claim that they're making. I don't know. I don't really follow them. I know that they're very successful, and I know that they've got long track records and all that kind of stuff. But I'm just saying that they're very high profile, and they're not buying the recovery, right? According to them, or at least that's what the media impression that was left this week, to my knowledge. So keep that in mind, right? For what it's worth, whatever that's worth. In terms of the downside, since we're talking about mainly trying to move up, I think, right, you may as well not worry until you get to the 50 in IWM. I'll work my way backwards. I mean, you're above the 50 now. That's clearly a good sign. A lot of people follow that. You've got your short-term SMAs swinging upwards. So I think really probably not worth getting yourself worked up, unless, of course, material news has really shifted things. But I mean, I think for now, like, you're fairly safe as long as you hold the 50. You're also fairly safe, I think, in the diamonds if you hold the 50. As long as the diamonds can hold above the 50, because it also has the rising short-term SMAs. So as long as they hold above there, there's no big deal. That's no big deal that there's maybe just trawling along there. But you do have to keep in mind that you could almost have like a mini double top. So if there's going to be a little bit more of a reversal before we run again, that little mini double top pattern that's in there could be part of that mix, but it's mini, right? It's not normally something to worry about, other than the fact that it's kind of occurring in a way. It's not a perfect double top, by the way, but it's occurring in what I would call a rising wedge. It's in all four of them as well. So probably really the same thing, right? Even if you allow for the low and the Qs to get taken out from this week at 477 to round it, you still have the rising 20 and 50 to catch it at 471. So I really wouldn't panic yet, right? Unless there's news, until you drop below that level. As far as where we go on these things, I think we have to really get through the SMAs that we've looked at. If you get through, especially if you get through the 150, that's the highest in most cases, then you're looking at, wow, this is really impressive. That restful base camp really seemed to have worked out. Now what? And then you start looking at the breakdown, things like the breakdown level that we already discussed in SPY and other things. And if you're in the services, you want to ask me about it, just put a question in one of the forums and that I'm a part of, which is most of the services we have, and I can try to take a look again and get folks levels on things. But yeah, I think that's the 150 again coming in right there. That's right near, it looks like about 580, yeah, 580.08 right there. That would be the next level. That would take a 3% pop. Not out of the question, but that you got to get through the 200. You got to get through this resistance line, the 100, before you even start talking about that. And so, like I said, in the most cases, you've got intermediate term, long-term trends that are still up. So to me, right, the bulls have that in their favor. Plus, they've got a base camp built that's a nice little cooling off base camp. And they've got that all going for them. Now, other things they have going for them too are that market breadth has started to get a little bit better, right? So even energy, which I've got a few ideas that came in, I showed some of those, but other things too. This is really close now. It looked like it was about to roll over. I had a bearish idea in on a name. I can't remember what it was. It might have been like HAL or something small. I can't remember, but it looked like we were on our way lower. And now they kind of held it there with a higher low, and now they're really close to putting a breakout together, right? So again, this is also a wedge, and it's in a declining situation. So you got to be careful there as well. If this breakdown doesn't happen, or a false breakout attempt develops and then it reverses. But for now, they look like they're trying to get ready to pop these things up, maybe close these gaps. But even that took a better complexion on the big leadership sectors. They digested just like the market did this week. XLF, as you can see, kind of that continued on its merry way. They didn't hurt XLRE. Interestingly, the healthcare, which I had a couple bearish ones on that one, that did go down. I don't know how they fared, but that one just didn't look like it was acting well. There was some bearish UOA. So I got that into a couple, I think at least one, or if not two of those in the log. Staples, that kind of chilled out, but XLY, right? This is another good sign. Slight uptick here, a little bit better to close out the week. You got to always be concerned about the false breakout. It's on the cusp of breaking out, but otherwise, like, I'd rather have this performance this week where I back off quickly and then go and really create a new high and a new closing high for the week. And even your transports did something similar. So I think this is a big change in terms of if we're trying to kind of talk about at the margin, where is it getting better? It got better, and here's the industrials. They definitely got better. Again, the pattern's a little concerning in a lot of these things, frankly. Even in here, like that's a concerning pattern in XLB and basic materials. And here's your utilities. They're back going again. So, but overall, I think if you look at these objectively, and we could add this in now that we're kind of done with that. We just take a quick gander at SMH. I mean, it does look worrisome in terms of the pattern, but at the same time, right, it definitely made its way up higher, right, for the week. So they found a way to move it up. There was NVDA news. We had NVIDIA UA. It popped a little bit. Obviously, not a good follow through. They do have this looming here. They often will do a pop and a week, 3 or 4 weeks in front of NVIDIA, which they've done some of, and then they'll sort of swoon it a little bit as you get towards earnings, and then they from there, I guess it depends on the earnings. But SMH obviously looked good. XAU, right? This also is a sector we check on at times. This looks like it's making another attempt now to try to run back towards the highs. So it's a very interesting situation where the dollar's now moving back up as well. Oops, I hit the wrong key. So that you got the dollar moving up, you got gold moving up. These are just very interesting times. And gold and silver are moving back up. We've talked about their potential for literally for 2.5 years at this point, with the pattern that's just continued to try to fire. But after getting obliterated, the dollar is trying to work its way back up. We've got the yields, interestingly, right, also moving up. 10-year here, this moved up. So this is interesting. I mean that those are not normally things that happen the way that they are as a package, and that's what's happening. And you've got all these things moving up. So pretty much, everything's being bid. We have been hearing about the flood of M2 and all this other stuff. So, and apparently the public is back grabbing shares of stocks, I should say, with both hands. So that's all there. So everything's getting bid. Apparently, this doesn't normally persist for too long. So something's got to give at some point on all this stuff. But this is the action this week. This is the action this week. Now, from another perspective, excuse me, that I would share, that would be market breadth. And I'll bring up the SPY, even though, again, I say it every time, but this does not affect the data below in the subgraphs. It just brings up the market chart for us. And you know what? I'll put SPX up there so it's cleaner, so you don't have all the lines, actually. But you can see really that breadth has continued to really improve. Here's your advanced decliners, cumulative average, right? That continues to work and trend higher. As I said, when you get overdone in these things, it almost becomes it gets too good, right? And you get a little concerned. Things have cooled off a little bit with the McClellan oscillator, but McClellan summation is still uptrending. There's been some talk here, right, with the percentage of stocks above the 50 and so on and so forth. And that's a good thing to keep an eye on. And clearly, I keep them on my charts as well. I like to look for when they get really extreme, one way or the other. And that way you kind of know that maybe they bought the market too much or sold the market too much. And in this case, right, because your SMAs have declined, with the new math getting factored in due to the swoon, it's made it easier now that we've rebounded, of course, for stocks to jump back above the 50, because in many cases the 50s were brought down dramatically by that really significant sell-off that we had. But anyway, the point is right now that this is not crazy overdone. None of this is crazy overdone, and it's acting fairly well overall. I think as a package, it's acting fairly well. So again, another thing that points to, you can think what you want, say what you want, but overall, the charts continue to support the rally overall, with with all the things we tend to look at, all the basic kind of nuts and bolts views that we take on things, that all looks fairly good. Let's make sure we're covering things. So I think I can check box a couple things off the list here. Um, so we covered this right there. Virtually a lack of progress, so that's a win. The little pullback I kind of mentioned at the tail end, I think, of last week's video, that happened on early in the week, and then they recovered and held on. That cooled the market, and they held on to most of their percentage gains. Right now, to me, and again, this could be, well, I've got the line written already. I think there's a lot of hopium and rose-colored stuff going on myself, but it's waiting for now, and there could be something to it. And that's the problem, is we just don't know. I say it every time we get in this situation, but it's possible that the roadmap is known by the deep pocketed types relative to regular folks, right? That's not a stretch. And therefore, right, they were ready to buy. They want to mark up stocks to get, even if they're thinking stocks are rolling over again, they had to absorb a lot of buying. Selling. They wanted to probably mark stocks up, offload them. Just look at your accumulation and distribution cycle somewhere on the internet to see what I mean, if you're new to this stuff. And so even if we go back down again, they'll be in a better position. Anyway, just remember, excuse me, that a news hit could shift all this very quickly. And that's where that rising wedge pattern comes in. The permabulls are up to their same old tricks. Again, they're always finding a reason, right? There's nothing concerns these people. The Fed's not in their corner yet. Q1 wasn't as good as they were telling us it would be. They're now celebrating earnings beats that are revised lower. There's clarity's not there in a lot of cases. Doesn't matter, right? It just doesn't matter. A lot of the good stuff they're talking about, they normally dismiss bad stuff when it's backward looking, but when it's good stuff, they still talk about it. I say this every week, but that's pretty much what they do. If you're new, this is what I've seen, for decades. The dismal lining I talked about is the rising wedge, or the second half or back half of these. These are ubiquitous now. They're across the market. That's concerning to me, but not an immediate action thing. Again, this is more to me of a pattern that we've seen only since the QE kicked in. You just didn't have these instant comebacks the way you do now. Talked about Gunlach and Tudor Jones sectors. They look good. I showed all those, but the one caveat I will add to the sector discussion is that we haven't seen that sort of secondary breakout. What do I mean by the secondary breakout? I mean that, let me grab this line here and I'll move this horizontal line. So the next thing is, right, you broke out. It's not letting me do that for some reason. Okay, well, that's not a problem. I'll come over here. I hope you all can see this. I'll use a couple of resistance lines. A lot of you've seen me draw these simple lines that I've used for my whole career that I think are valuable. Anyway, there's the first breakout, for example, as an example, because you can argue different things or whatever. But the next breakout would be taking out these highs, right, on that flat line that I drew. And I know that's small, but this is everywhere. That's why I'm drawing it here, because you've got this sort of secondary breakout. Can they get through? And interestingly, right, this is why I think it really helps to look at all the stuff we do, because you can see the sectors are at key junctures technically, just like the market is in terms of the SPYs and the Qs, right? They're at big levels that are basically flatline levels themselves. And the sectors are by and large very similar. Many of them are very similar to that. I could put a flat line right up in here, in the XLF. It's 1 or 2% away from breaking out. So if they can push through there, and hold, I'm going to give it more respect. I'm not going to say it's over. I want to see new highs made and held to really be convinced of that. It doesn't mean we don't trade it, though, as I've been saying for weeks. Just keep trading it, because that's what we do. Anyway, that's what I mean by stage 2 breakouts. This EPS is not over. The big dog, the late one, is NVDA. That's 3 weeks away. A lot of times, they really don't let the market sort of do macro responsive things until they get through NVIDIA. I've seen them hold this market up many times, and then once NVIDIA has reported, then they release the market to have to just sort of stand on its own 2 feet. If you want to look at something like that, let's go back to here, and I'll just do this very simply, and we'll take a look at last summer when they, here you go, right? Here's the NVIDIA release on 8/28. Now let's go bring up SPY and let's see when the SPY rolled over in the summertime. And you could see they kind of held it up. SPY rolled over after that, right? So ultimately they were still buying with the election year and all that stuff. But that's when they finally kind of let it go and did its thing. So I'm not guaranteeing that we hold up for 3 weeks. I'm just saying that I've seen them kind of hold things in check until NVIDIA is out of the way. And then if it lets them rally, they may. And if it's problematic, maybe that's when you start to get real selling. I don't know. I just think with this news, with this administration, you can't wait around for that, though. You can't be as comfortable, like it's steady as she goes, the way you are in other administrations, just because Trump just tends to make a lot of news. So we talked about these being in action. In terms of the trends, are still intact. The Fed is at odds, but the sectors in breadth continue to look good. This was healthy hesitation this week in my book, just calling it objectively. We're now at that underside of the 200 and the trend line support resistance line, tests we talked about should start to happen very soon. I mean, we're kind of there, so they should start to tinker around with, can they get through or not on all this resistance. I don't think it's going to be easy, but I would still say, like in most cases, the bulls win, right? So you have to factor in the news wild card in both cases, though. It could be easy if they get news they can use. On the flip side of that, you could be on your way to breaking out, and then you get this sudden reversal. That's because, and then you get a false breakout, right? So again, you have to be a good position manager and really stay on top of it. You have to really stay on top of what's happening online, the kind of news that breaks and all that. So I would just say, if you're still skeptical about all this, I get it, but I would just keep going with the flow. That's what we try to do anyway, even when we're not in this, but it's all you really can do unless you're an insider and you have better info than we do. So I would say, look, the bulls have the trends and they possibly have the pain trade plus, meaning that the trends, as we've shown, are still with the bulls in intermediate term, long term, and they've got probably I think there's a lot of people out there that have a problem with the rally and how it's come back so easily, so quickly, without really a legitimate basis, right? You just still don't have clarity from Trump. You just don't know what's happening on these trade fronts completely. So at least we don't. Wall Street might, but we don't. So I think a lot of people still are kind of fighting against this. And again, I wouldn't really take odds with probably a lot of their arguments. It's just that I think that for now, as we can see it just objectively, the bulls are holding on to probably a little bit more of a handle on this market than bears are, and have been for a few weeks. The news bombs make it really tough. Nimbleness is a real thing, right? It's not like this is just something we talk about. I'm a stickler for reminding people about position management tips and tricks, if you even want to call them that, just things that I learned the hard way. And if you want to call that nimbleness, then go right ahead and do it. But that to me is being nimble, where and it gets back to Pete Nigerian DDA, discipline dictates action, where you make sure that when you have a moment to breathe, right, and you've had this good run, that you don't let them zap you, right, and take a lot of it back because you took your eye off the ball to go make a ham sandwich or pick one up at a gas station, like my friend used to say as a joke. But so, yeah, that's what you do. Like, okay, this has been great. I still think it looks good, but I'm doing this, rolling, I'm trimming, I'm doing both, I'm over rolling, whatever. I'm rolling out too, whatever the case may be. Just don't keep all that money on the line after you've gotten extended and in a news-driven market. This still would remind everyone it could get crazy out of nowhere again. I've seen it many times, so I would not sleep on that. You could, we covered it earlier, you could be barely removed from highs in an engineered blow. What do I mean by engineered? I mean the accumulation distribution cycle, the news cycle. I'm just going to leave it at that. If you look into that, I just don't like this stuff happens all the time. It's happened my whole career. No matter what, they find a way. Let's just people say, well, you're saying the market's rigged. Well, to be honest, I do think the market's rigged, but that's what we have to do, play along as best we can with the rigging and to benefit from it for our own families and ourselves and our own families. Anyway, I think really the current thoughts are poised to go. And I would say the bulls usually win, but there's no time to rest because you've got to play it smart, as we talked about, for the various reasons, the news and these rising wedges. So overall, it's really hard to say bad things. If you say, well, you didn't get advancement this week, right, you're a pretty tough cookie because you got this amazing bounce right on this news. They put in a higher low, hold to 200. It's pretty much been up and away for 2 weeks, 2 weeks going into that. And then, right, they just take this mild breather and they hold on to almost all the gains. So, I mean, I think you're asking for a lot if you needed it to go through, and really right back towards the all-time high. It hasn't been that long, and you still have murkiness. And again, as I said, with Gunlach, with Tudor Jones, with their track record, the respect people pay to them, I would look into that. And again, that's another reason why I wouldn't argue with a lot of people that are skeptical about what's going on here, and they're wondering how in the world does this thing just march back. But like I said a few weeks ago, don't be surprised if it does, because this is what these guys do. To me, it all goes back to the accumulation distribution cycle and the fact that they know the news roadmap and use the news roadmap like champs. They know it. They know it better than most of us do. And that's why we have to really defer to the charts and the action to discern what we should be doing, because their behavior is within the chart and it's not always easy and clear to read. But if you're pretty objective about it, I think you can still come out far, far ahead. So as of right now, we have to give them their due, and we can't assume that they're going to get through either, right? That's the thing. I'm treating it more like, yeah, the bulls are in charge for the most part. They've done some pretty good work overall, but they're not through. They haven't had the secondary breakouts we talked about on the sectors. They haven't had this breakthrough and hold on this key resistance. So this is, they call it a test for a reason, right? We called it the underside test, and now we're there. And so we'll see. It could get easy if the news breaks a certain way, and then it won't be much of a test. They'll zoom right through, or they'll just retreat quickly. On the other side, if we're waiting and waiting on news that could come, it hasn't come, right? It might not be so easy to get through right away. So we'll see. But I think that's really the main stuff I can try to help out with this weekend. I hope that something I share with you helps you out this upcoming week or some week in the future. I want to wish everyone a great weekend if you get to watch the video early. I hope it helps you in some way, as I always say. I want to thank everyone for tuning in. I want to wish everyone the best next week as well. Thanks again.